Welcome back. Now, energy is our focus. Let's animate into some numbers. Overnight action for North Sea Brent and for NYMEX Light Sweet. We did see, if anything, a rise of about 0.5%. Oil producers, are they going to extend their production agreement? The Saudi energy minister, according to Reuters, reckons oil producers will do whatever it takes. They're doing a druggie in the corridors of Riyadh to rebalance the market, and expecting a global deal on cutting crude output will extend through all this year, possibly into next. Well, Pete McGuire from XM.com, CEO no less. Pete, you have booked your flight to Vienna, have you not? Because Showdown Central taking place soon for the cartel. Will that, whatever it takes, hold?
Well, good afternoon, Carson. Yes, I think it will. You know, when you're thinking about, they've got a major issue on hand. You've got increasing production coming out of the States and the non-OPEC producers, so they're, you know, ratcheting up as far as production. And then you've got the OPEC and, of course, the Russians sitting there and saying, well, how do we try and balance what moves forward? And I think you're going to run to probably the first quarter of 18. I'll put my finger in the, you know, in the air and say that.
Wow, so OPEC and discipline, and Russia along for the ride as well. And Q, the Baker Hughes panel.
What do you got?
877, up 7.
Thank you, Mark.
So you talked about production ratcheting up, Pete. There's the number of truth for you.
The numbers are massive.
Exactly.
Yeah.
You know, when you think about the middle of 2016, Carson, the crude oil in the US, as far as the rig count, but more importantly, what they're pulling out of the ground, it's up nearly 1 million barrels a day. We're at 9.3 million. We're up about over 10%. So maybe a fraction short of that million, but I'll tell you what, it's impressive. And by year end, you could be at, you know, 9.6, 9.7 million plus.
Look at the hedge funds and a lead call out on just the writing on the wall.
Yep.
Essentially, their positions in the unwind. Just speak to this one.
Yep, exactly right. I mean, you know, last week, if you look across the commodity complex, last week was one of the most harrowing weeks. You had a really huge washout from base metals, and we saw that in ore and copper, and then across to energy and what happened on, you know, Thursday, Friday. So it really copped it in the neck, and those hedge funds and money managers have trimmed positions well back to you know, cutting their long positions to back to before that last OPEC meeting in November of 16, Carson. So there's a lot of very anxious traders, and they're taking chips off the table.
Adam, what do you say to retail investors who have been encouraged into ETF products that give them that exposure, that they've put their chips on the table? Do you say it's time to, you know, to get out, follow the leader?
Well, a single commodity ETF?
Well, maybe even one that takes in a basket of bulks, say, including energy.
I think. First of all, I'm concerned about the volume in ETFs, and that can certainly move commodities, e.g. gold, positively or negatively, as people want to get in or then get out. And it makes the swing a lot bigger.
Accentuates it.
Over because of the volume that's going through on the ETFs. For clients that are holding a basket of commodities, I would look for them, especially if it had iron ore in it. Yes, I would look to start to pull away, and depending on that commodity basket and what that mix was. Yeah,
and it's complicated even further still by the likes that it does get nuanced. Pete, you know, the likes of zinc, which is showing renewed upside. You know, go further into the industrial usage story, even on China. You've got pipe making, you've got zinc demands, you know, which kind of offsetting broader calls over copper heading south, zinc's going north. So if it's in an ETF basket, you're kind of caught in the crosshairs.
Well, exactly right. I mean, that's been normal occurrence across if you were a trader on base, and you've just said it, on an ETF, or people that are holding options, or, of course, they look at a, you know, a particular derivative that couples across, you know, a sector. Look what happened to gold over the last matter of 4 or 5 trading sessions. It really got smashed at 12.25, and there's weakness there. US dollar strength. The overall, you know, when you look at it holistically, the global economy is not looking that rosy. And, you know, this could be just a little bit of a wake-up call. You've seen that big sell-off. Also, Carson, take on board that technology and innovation has changed from a miner and, of course, from a driller. And what we're getting as far as drones, replacing manpower, to look at agriculture. We're getting a chicken from hatching to 3.5 pound in 47 days. I don't know whether that's normal. And really that takes on board feeding the globe. So we've got growing consumption, we've got growing population, but seems to be at the moment you've got weakening of pricing.
Okay. Pete, on that salutary note, we must call time, sadly. Thank you, as always. Have a good budget.
Thank you, Carson.